Okay, hi there, guys. Just let me know if you can hear me. Not sure if it's coming through well. Only a couple of us in at the moment. See if we get a few more later on, and we'll get rip into it. When the market's not going so good, people aren't that interested. So, alrighty. Okay, well, I'll just get into it. Welcome to TradeSetup. It's the live stream for the 20th of September. For anyone that's new, feel free to join us at Twitter in the top left-hand corner. Was it at trade_setup? Facebook in the top right and bottom right-hand corner. Subscribe to us on YouTube. Also, we just got our general advice warning there, so take some time just to read through that. All right, markets. Just do the usual. We'll go over what we're doing today. Look at some charts. Pretty much just want to go through the ASX and what's happening over in the Dow. Markets weren't too exciting overnight. We'll have a bit of a look at that, and we'll just go through a couple of stocks. So we'll go through what we've got. We've got a couple of shorts on. So at the moment, I think we've got 5 from 5. They're all going the right way, short or long. So pretty happy with that just at the moment. I mean, the problem comes where if this market starts kicking up either way, or kicking up or falling over, then we're going to have to just look for where to take some profits on that. But either way, we'll go through those. Haven't really got any other alerts on at the moment. It is a bit of a mixed market. I think I spoke to a few people, a few of you anyway, having the same sort of thing. There's a few that have been going quite well, but on the flip side, they are trending, but the markets at the moment, it's hard to justify jumping in at certain levels, especially if things have been trending quite hard. Because if it does roll over, if we get a bit of, more issues kick off, and then we do roll over quite hard, they're the first ones to go. But at the same token, you want to make sure that what you're taking is a strong setup. So we're not seeing a hell of a lot of those anyway, for what I like to see anyway. All right, let's get into it. Let's drop that down, transition that. So how are we all going today? You guys ripping into the markets today, or just sort of sitting around watching the action at the moment? Pretty sure. Right, so overnight we had the US, the Dow's up about 150 points. So that's quite good. That's quite handy. I think it's supported by banks. Bond yields, the big thing, that sort of started kicking off. Well, the last couple of sessions, yields are rallying, which means bonds are coming down. So there's two things, I guess, positive. There's a positive and a negative. Uh, G'day, Lauren. Watching Netflix. That makes a bit of sense, doesn't it? So bond yields are kicking up. Now, they're kicking up because of interest rates. So they're looking to raise interest rates. Nothing's really changed there. The numbers that are coming out in the US are still quite solid. We've been over this quite a few times. They're solid. They're pushing yields up. There's going to become a certain time where, and I think it's just because of the tariff situation, it's meant to be 25%. Now it's only 10% from Trump. He's got a lot up his sleeve, whereas I think China don't have quite as much, and I think they know that. So yeah, there's the yields are kicking up, which is because of the interest rate. So it's sort of people are leaning towards now getting out of bonds as well, because it's a safe haven. So buying to US dollars is more of a safe haven bet, and I think a lot of people have eased out of that as well. So that's buying the physical bonds and basically selling the yield. But now, because they're coming out, they have to sell the bonds back, so the yield's increasing, and also you've got the yield increasing. It's twofold because of what do we have? Interest rates. So sooner or later, that's going to have to be factored in. I think they're looking at 2 more this year and a couple more next year. So everything's on target there. Also, banks are doing well. They did well over in the US. So that buoyed the Dow. There's only, I think, 2 of the major banks out of 30 are on there, which is interesting. I mean, that was up 150 points. So I was quite surprised. And that's probably also because the Dow tends to get hammered on trade tariff concerns and what, the argy-bargy, and the fact that it's potentially eased off, and then looking at, okay, if it's only 10% from China and 10% from the US, even if it escalates a bit more, that's not really going to affect too much. Maybe we've over factored in quite a bit, and so the market's now leaning towards looking at growth. So now I guess the next stop is to see interest rates. They keep raising interest rates, or they do. How's that going to affect, along with tariffs, how's that going to affect growth? Is it going to start slowing growth down in the US? But that's something we'll have to look at. Either way, I think it's just buoying the market still. S&P didn't really move too much. It was up slightly, and the Nasdaq was down. Now, I don't know if anyone knew. I only really found out overnight. Nasdaq, not rebalancing. They're readjusting the index. So I think a lot of the big punters, like, what do they call them? You got Facebook, Amazon. I forget the name for it. The Fangs. Facebook, Amazon. What's it? Netflix, Google, something else. They're getting not re-rated, but the indexes are being readjusted. So some have been moved out, some have been moved in. I don't know exactly what's happened, what's happening, but I think you can expect a bit of volatility there. So there might be, because that's what's been lifting this, the rally of late. Well, of late, it's been pretty much the really pushing the rally has been all the tech stocks now. Bit of volatility in there. You're going to get major rebalancing of portfolios, index trackers, all these sorts of things are going to have to adjust. So you're going to find a bit of volatility into some of those indices over in the US. It's good. It's worth just jumping on and Googling it and have a bit of a read. I haven't had a big read into it. I just saw it on Reuters this morning. So I find that quite interesting. What else? So let's go over the charts. So that's pretty much it. Europe was up, but they pretty much played catch up. If anyone just looking at it, the indices will close about 1. I think the US opens at 11:30 at night, our time, or Melbourne, Sydney time. 11:30, and what are they? The US, so Europe closes around 1 a.m. I think. So they only get sort of the start session, and if the US kicks off into the close and rallies, then the DAX and the FTSE in Europe are going to play catch up, which is pretty much what happened today. So I mean, it's not really on anything significant. They're just sort of following the US along as well. Let's get over to, where did I find my, I want to go here. I'll just get the trading tools. What do I want? Charts, watch this, markets. There we go. Indices. Oop, wrong one. There. Oop, there we go. I'll make that larger. All right. So we'll start off. We'll go on to the Dow. Just have a look at where the US is. See if much has changed over the last few days, which I don't think really it has. Probably a bit choppy. Dow. There hasn't really changed at all. It's kicked off quite hard, and you can see that's probably playing catch up too. So you had the S&P run into all-time highs, and this, look, you can argue back and forward what's driving it. Banks. I mean, the fact that there's only 2 banks on there. I'm pretty sure there's only 2 banks. I think it's Merrill and Goldman's are in the top, or the Dow. The rest of them are sort of what are they called? Tariff-related companies, and they're the ones that have been sort of copying it a bit over tariff concerns. They might be buoyed a bit, but I think this is making a run for the highs, sort of playing catch up to the main S&P, or the big S&P, the broader market. Let's get rid of all these. You see, it's still positive. I mean, it's getting ahead of the moving averages, so it gets ahead of itself. Reversion to the mean, has a bit of a pullback, corrects, builds a higher low, and off she goes again. It's a bit different to what we saw back on the weekly. What we saw with this little run up, where it was really staying quite strong. Minor pullbacks, good little run up, a little minor pullback, especially on the daily, and it got a bit ahead of itself. A lot of heat's come out. It's held a major higher low on the weekly. So this high low is going to be confirmed when we touch on this. What is it, around 26,600, sorry. It's still looking stretched on the weekly. The daily's, hovering around that stretch mark. It doesn't matter too much as long as it's holding higher lows. So, and it's still kicking off. So I think it's playing more catch up to what we've got on the S&P. The S&P is running into a bit of, look, it could be running into some problems there, but you can see as long as it's holding higher lows, this little pullback we had a couple of days ago, turning around and retraced that yesterday. Sorry, not in the overnight session, but the previous session. So what was that? That was Tuesday night session. So pretty much dropped off. Next session, straight back up again, and we're back up to around that. Or did we finish at highs? 2,900, just above 2,900. So it's still holding higher lows. The key higher low is at 2864 on the S&P. So until it takes that out, it's still holding the trend up, and you pretty much just got to follow the trend. And inside level, if it does take out that low at 2886, you can see this little minor high low in here. This inside, you might just want to. I mean, if you're trading it, obviously, or if you've got an eye on it, just keep an eye on it because it could be that it's just making a double top, and on the weekly, it's could be just a blowout of these highs, and then we have a major correction on the weekly. Just have to keep an eye on it. But either way, they're both positive. The US market's positive; they've got growth. We'll go over to Europe because they're still trying to hash out a Brexit deal, which is kind of annoying people, I think, over there. And one, nothing's quite happening. There's nothing coming about yet. Europe will pop up every now and then, say, or the ECB, or uh, what is it, Brexit negotiators from the European side or the European Union saying, yeah, we expect a deal to be done. We expect this to happen. It's all good. And then nothing actually happens. So it's still, so every time that happens, it's sort of, you get a pop up on the pound does all right, FTSE does all right, the DAX does all right. Then nothing really happens. So they've still got to nut out a deal. Um, and it's coming closer and closer to the deadline, I think. And they've got, so there might be some news in the next couple of days. I think they've got the EU summit. So they're hoping some news comes out of that or something happens there. But either way, you can see this is the FTSE. The FTSE is still under the pump a bit, and it has been since the start of this month. It's sort of come under pressure, whereas the Dow's going up. We're actually not doing too bad. We did fall over, and we're looking to find a bit of a base, potentially. We'll go over that in a second. FTSE is looking negative. The DAX, look, it's same sort of scenario. It's holding these lower highs, and if you go into the weekly, it's lower high here. So you got the major highs up through 35. You can just see through the tops there. Major sort of base just below 12,000. It's popped up, lower high, pressed down, fell short of that low, fell short of 12,000. Popped up again, built another lower high. But you can see that sort of price action is more gradual or controlled on the way down. So it's not too bad. I mean, if I was trading the DAX longer term, I wouldn't be too concerned about that. It's what you'd want to see to get more bullish on it, and it probably won't happen until we get a deal, or until they get a deal, not so much Australia. Well, they sort something out with Brexit, is a high low, but you want sort of, if we can get through there, we're holding up this zone here, we start to lift it, we can just bang around between there, build another lower high here on a bit of a rally, pull back. So you just sort of get in this contained move, and then if we can start to hold, well, we'll draw it up properly. This low, if you can start to hold a higher low, that's what you'd be looking for. As soon as it breaks out, then you'd probably be looking to be really bullish on that market and see if we can press back up to, say, 13,500. But I think it's going to be compressed for a little while yet on the DAX. So yeah, that's pretty much it, guys. We'll go over to our market. Let's take a look at, we'll put this on the bigger chart. It was down earlier on today, a bit more, about 20 or 30. I think it dropped. Let's just look at that. So this is intraday action. So we pretty much opened up not too bad because really not much happened overnight. The SPY didn't follow, well, it followed the US. I think it was ending up from 4 o'clock close. It was only down about 5 points, 4 or 5 points by the time it closed at 7, I think 7 o'clock in the morning. So not much happened there. But of course, we've opened, chopped around a bit for the first 5 or 10, 15 minutes. We did have the rollover today, so it was an extended open. That's probably why we sort of held around that 61.90 zone. And then, what was that count as a 5-minute chart around 10:15, bang, straight down. Dropped about 20 points, found low, popped up, built a lower high at around 61.85, and then dropped off again. Took out the lows, but it wasn't convincing. And then we bounced straight back again. So we're only down about 10 points, 9.9 at the moment. Down about 10 points at the moment. So not too bad. It's the daily price action. And this is what we've got to keep an eye out. So really that weekly chart, we'll go back to the weekly. The trend is still up on the weekly. We're in a correction mode. Whether it's going to be a macro correction or this is just a pullback, build another high low, and off we go on the daily basis, or whether we're going to get more of a macro. By macro correction, I mean we've got that pullback, whether we pop out, build a lower high, and have that secondary move lower to take out 61. So 61 for me is sort of that line in the sand, whether if we can hold up there or we maybe in the next few days we retest it and then bounce off it, that'd be great. I mean, you could easily just go sideways. And remember, we'll draw this up. This is what we're looking at, the support. And look at that weekly, actually, the stochastics, I just saw it. This is the weekly, yeah. So this is what we're looking at, this sort of zone through here. So, you know, if we do chop around, we could easily pull back and still hold the weekly. It's just going to annoy, I guess, annoy a few people who are trying to buy around here and get squeezed back out on a move down, or are going to be holding in a position that's down for a while. But either way, this could just sort of chop sideways until, you know, China and US come to terms. The emerging markets they're building a little bit only because the pressure's come off the US dollar, and the US dollar. Sorry, the pressure's been coming off emerging market currencies because the US dollar has falling over a bit and is coming under a bit of pressure. So they're bouncing a bit. So whether or not longer term they could potentially come under pressure if the US dollar starts rallying because you've got these higher yields pushing the dollar up, and you've got interest rates. So sooner or later they're going to take hold, and the US dollar is probably going to start appreciating as we raise as the US raises rates, and that could put pressure back onto emerging market currencies. It just depends between now and then whether or not they start sorting their, I guess, their issues out. I wouldn't have put it so nicely, but sorting their problems out over in especially Turkey. So there's going to be no contagion effect. Now, Turkey did raise rates. I don't know if everyone knows that, 6.5%. So that's a massive rate rise. God, imagine they did that. It kills the whole. It's going to kill the whole mortgage industry. But anyway, so they've come out and slugged them another 6.5% just to try to bring a bit of a base into their currency, so they're not going to get creamed too much. And it has worked okay, along with the selling in the US dollar. So if that's not going to be an issue, you've got China and the US come out and settle their differences or come out to some sort of agreement, then we could, this 61, we could just sort of chop around sideways until then and hold up above 61. Or if there's anything negative, I expect us, any sort of negative news, and you get the US getting banged around a bit or getting sold off quite heavily again, or, you know, just coming off the highs where it's a bit of heat coming out of the US market and we roll over, I still expect this longer term to hold up and this 60,000 at least to hold up. Now it is 100 points away or so, 180 at the moment, but we'll just have to wait and see how it goes. We'll look at the daily, because the daily price action, it looks like it's getting a bit squeezed, and this is a little bit of a concern. So you can see, just remember the weekly charts, the stochastics are coming down to that oversold mark after that big push down. It's coming down to that oversold. So we could easily, you know, we're grinding up at the moment. We could easily sell off. It smashes down the oversold, or it holds sort of this oversold market. We head down to 61 or 61, 6,500, whatever happens there. We just wash out the 61 level. That could easily happen. As long as it holds up here, we're coming off that sort of oversold, you can see, level on the daily. But what I don't quite like is this price action. You can see this is really grindy and more choppy. So 62 seems to be holding at the moment. We're not going on with it with any sort of form of positivity. So we might, the higher it goes, I don't mind it. You know, we've had that sell off. I don't mind it sort of doing this and grinding higher. But if we can sort of have a blowout to the top and then we might come back down, retest support, even wash it out, then start to hold higher low, that would be ideal. If you get that and you get the double bottom off there, I'm sure that's going to drag in a bit more buying and be a bit more positive. But at the with this little rally, I don't think it's the time to load the boat. And we're not loading the boat. We've actually got some shorts on as well, which is more of the hedge in case we just head south. Well, not that far down, but in case we do, I'll draw it up. In case we sort of do this price action, head straight down, and maybe, you know, down to sort of that 6,000 mark, and then start chopping around at 6,000. And I could spend some time there. I'd rather be, because we've got a couple that have done pretty well. So I'm expecting if there's going to be a sell-off, they're probably going to get hit because they haven't really had a pullback. That's what's a bit concerning. But the two shorts are actually, they're up as well because you know, they're rolling over, coming under a bit of pressure. So yeah, this is what I mean. At the moment, I don't have an answer. What's going on? I don't like this price action, that sort of grindy price action. So for me, I'm expecting it to sell off. It's just from there we have to keep an eye out. Are we going to hold 61, or we're going to blast through 61 and pull back to retest it from the underside? But until then, we don't know. I don't expect this to kick off in any significant way until, I mean, maybe China and the US come to an agreement or whatever. Then we could kick off. and we start to rally again, but I just don't think that would happen. I would expect more of this price action. You can see that was a bit choppy here. We sort of popped up and then we pulled back. And then if we do pull back, even if we pull back like this, that's a good heads up. And then that's going to be our higher low, for instance. You can see what I mean there. So we've had that sell off. We sort of grind our way back up. And then when we pull back, we do it in two stages. That's going to be, quite positive. I'd see that as a positive, and then start to look to hold that higher low, because that sort of price action is different to a straight sell-off. A straight sell-off is showing fear, and people, running for cover, diving for cover, and that might be that you don't know what's going to cause that, but if that's the case, it could pierce straight through 61. So I'd rather see that type of price action, and again, exactly like we saw previously back in, I don't know what that is. What's that? Back in the daily, that was back in June. If we get this price action, that would be good. Then I expect us to lift, pull back, maybe touch on 61.50, 61.30, 40, whatever, build that higher low off 61, and then see if we can kick up and go with it. But we'll see. We'll see. All right. So what I'll do now, I'll just go over what we've got. We'll take a bit of a look at it. But feel free just to put in some, whatever you're looking at, something you want to take a look at, put in some codes, and we'll jump straight into it. Let me just take a look at something here. Oh, that's not it, is it? What was I on? Oh, that's not bad. All right, so what we got at the moment, we've only got a few. So we've got TER. We've taken a partial on that. Just decided to raise the risk today. I'm not too overly confident. I mean, this is heading up, but you can see, if you can take an eye on that, we'll take a. What we'll do, we'll go to here. What I don't like about it, I mean, we're hovering sort of around the overextend on the daily, and if you look at the weekly's just coming off. I mean, if you look at divergence, convergence, whatever you look at, it's showing a bit of that. I mean, it could just hover around overbought. Every time we get to overbought, both on the daily and the weekly, we start to roll a bit. I'm getting a bit tentative. I don't mind tightening the risk up on things like that, because you never know what's going to happen. I'd rather be risk adverse on things like, especially with what's going on. At the same token, I do not want to give it, you don't want to give it too much room, but you don't want to tighten it so much where you're going to get snipped on a bit of a pullback. And by that, that's why, if anyone that, I don't know how everyone holds their risk, but I'm always like, I want to be proven wrong. So by proven wrong, I have to be taken out at this low. Or I find this is not a bad level, because that's an inside level. You can see that. So it's had that sort of W pattern. A few people have talked about. Davin likes them. I know Helen's talked about him a few times. That W pattern, I don't mind keeping my risk under there, because I figure if I'm going to get stopped out there, something's happened. We're probably coming off a lower high. It's probably time for a squeeze, a bit of a pullback. So that's the reason behind it. I want to be proven wrong. I don't want to keep. I would never keep stops below, the previous day low, or a couple of days lows, say down just below 60, because you can easily get stopped on that. If it retests that 57.5, you get stopped out, and bang, up she goes to $1. I think there's a potential of this could rally to $1. So we've taken a partial, just trying to give it a bit of room on the upside for that to keep rallying. So what are we in at? 52, got out at 59, so booked some there. It was a handy little profit. We got the rest locked away really at 55, so it's not a massive gain for where it is at the moment. Oh no, 50, 56 is the stop at the moment. So we'll see if that one can continue on. But yeah, again, like, just don't want to give it too much risk. CDA is another one, which is, anyone's been watching, it's sort of been stuck above, around the last few days. It's been above 320. It tipped over a couple of days ago through 320. It's just popped up. This, to me, it's getting this heavy feel to it too, heavy look. And again, it's a very similar. This is Coden, KDA, CDA. So I can't spell CDA. So you can see it's got this level. Obviously, it's a bit of a level, 330. What I do like is the fact that it's holding this higher low. But I really do feel if it can't take out 325 soon, I'm looking to book a partial on this one. That's why I don't want to see it turn around and stop me out when you could have had a partial. You had more than enough time above 320 anyway. There is, if anyone watches the intraday or watches the, they call it level 2 or the market depth, you can see there was actually, let's have a look at it, let's see what's on there. You can see it at 321, there's 2,500, 320 is 6,000. There was about 20,000 or something before. So they're looking like there's a bit of a buyer out there. And they did ramp it up through, I think, 320, 21, and 22. There seemed to be someone take out a few of it or sweep the market up. You can see 31,978, so 31 grand's worth, nearly 10,000 shares at 322. I think before that there was another 10,000 or 8,000 or something. So someone hit it up a bit. So it looks like potentially it's a bit of a buyer, but like I said, I really want to see it get through that 325 or 326 high. And you can see on the weekly, it's getting to that overcooked mark. Now, if it gets overcooked and it's holding, this could potentially turn into a lower high. All right, so this is what's going through my head at the moment. Is really we've got this run up. We are contracting. We're holding high lows, which is always a good sign. So you don't really want to cut it out. You want to give it a bit of a chance to pop up. If it pops up through 326, great. I think it's going to go straight through 330, and we've got a partial at 340 anyway, and then you get that secondary move up. But if it can't, and we start tipping over and testing back down to that 318, 317 mark, I might just take a partial. I just want to give it a little bit more room at the moment. But we'll see how that one goes. That one's either way, we're winning on that one, and I think we've got it locked in. Let me just go back. I think we got it locked in at CDA. I don't know now. $3, and we entered at 2.99. So we're not going to lose on it, but I would like to see it kick off. The other two shorts, KGN, which is Kogan. We were short at 605 on this little push down. Had to take a bit of a heat, and pretty much got to 602, and we took a bit of heat when it got back up to 643. Had our stop around 655, I think, at that stage. And you can see these last 3 days, it's really coming under pressure. So I expect this to extend down. But again, on the short side, you never want to hang around too much, because if it's grinding, if it's a bit of a grind down, it's like it's a controlled move. Don't like seeing a controlled move. I want to see something on the short side if I'm short. I want to see people running for cover. That's what you want to see. You want to see this kind of action, like just boom, a couple of big days. But instead, it's a bit of a grind lower. So we're looking at 550 at the moment for a partial, 551 actually. But if we can't get there in the next couple of days, then I might just book it around 570 or something, book a partial, lower the risk, because I think shorts have a habit. If they can't go on, this could potentially be the higher low, and bang, it could retrace on you real quick. West Farmers short at, what was it, 50.35? So that's up a bit at the moment. Not much, only about 1.5%, 2%, I think. Probably about 1.5%. We're up on that one. It's pushed through 50 today. It's looking like this could roll over. And if anyone, the charts, the reasoning behind this, we don't know if it's contracting or coming off the highs. And if the market stays negative, I think this is going to come under more pressure. And the reason behind it, you can see this leg up here. That was quite controlled. Boom. We got this sort of gap up, a bit of a blow off, pull back to the MAs, tried to go again and built a lower high. So that's, you can see then we broke out of that, pretty much that was the end of the rally. We're getting a bit, it's still a bit choppy. We pop up to the highs, still holding lower highs. And this is the second time we're getting through that 50 zone. I want to see it go on with it a bit. I want to see if it can get down to test 49 and probably take a partial at 49. We'll just have to see how it goes. But either way, it's going the right way. And the last one is Molly, which 22.5. So it's not so much the daily that I like as much as the weekly chart. That weekly chart looks really nice. You had this big pop up through 40, pullback, lower high. This, you can see the move down. This is everything we assess when you're looking for a trade. And you're trying to get, by doing this, you're just trying to get, let's make it a bit bigger. You're trying to get a feel for the strength of the market, the overall market. Let's go back to our weekly. All right, so we've got spot gold and Aussie. Something different today, guys. You're going to kill me on the Aussie. All right. I haven't looked at the currencies for a while. All right. So what do we got here? So this is, the market. This is that little rally. I think we got some that we actually did pretty well on that. All right, so that was back in 2016. Big rally, a lot of heat come out. That was a good retracement. It was probably about 60% retracement of this leg, probably roughly 50 of this move up, the whole move up. Big pullback. So if it's really strong, you wanted to see it kick up from here, probably something like that, and go on again. Instead, you had this big retracement, pop up, lower high. You can see the angle of descent there compared to the angle of descent to the next low. So you can see that there's a bit of heat has come out of that move up, of that at that run up, and the selling pressure is not as strong, and you're getting buys stepping. So you can just see what that angle of descent there is, pretty much the buying pressure. Selling is well outweighing buying there at the moment. And the secondary move down, you can see that, okay, buying's starting to lift their game a bit, or buyers or the bulls are starting to lift their game a bit. And you got this rally up here, then you got this pullback, and you can see now we're just starting to lift. So this potentially a longer term higher low, which would suggest we're going to have a run up to 26, even if we just retest those highs, or 25, 26, or this leg up is going to lead to a leg up to say 30 somewhere, which would be nice. So the weekly is the chart that I think is quite good. It's got some legs to it. We may get caught in a bit of pullback if we look at the daily, but we'll see. We'll see how it goes. We're only up half a cent at the moment at 23, but it seems to be banging around there. I want to see it. I just want to see it lift and test up, have a bit of a spike to 26, and we'll probably take some off the table and just see how it goes from there. But that's it at the moment, guys. That's all we got. So, all right, we've got 3 up, and I'll have to go over my charts, don't I? What do we got? That's not what I want. This could be what I want. Here we go. Aussie. We start with the Aussie. It might take me a while just to get my bearings there. All right. We'll start at the daily. Now, if anyone knows, how do I get rid of those borders? No. Background. Grid lines. I don't want grid lines. Just want to make it black, do I? Vertical grid lines. Black. I don't know, grid lines black. Oh. I don't know how to get rid of them. Just want to, okay, that'll do. So that's your daily chart on the Aussie. We drill it back. We've got a longer term support zone here. We could just be still heading down on the daily chart. We've just got through this, and that was probably a fairly key zone. It's whether we react off. Oh, you can see what I'm looking at there. So the market's pressed down on the daily. We had that good reaction up, and we started to grind higher. And we got all the way up to build a double top at 81.16 before we pressed down. You've got this high low here, retested the highs, and that's led to this big sell off to currently where we are, 72.64. So it's still holding that move down. It's whether or not we get enough reaction. And the fact is, I don't mind the fact that you can see, just washed out that support at around 71.60, say. We washed out that support a few days ago, or probably a few weeks ago, and we popped straight back up, but we're still holding this trend down. So you would expect either a sharper move up to potentially to get up to an ideally or retest that high as 73. If we get there, then I would expect that this level is going to hold up. We might get this a bit of a rally on the daily charts and a break of this leg down, or we're going to hold a lower high here and start attacking it. And that wasn't really a washout. That's more of a break of that level. What it's done is broken that level. You've probably got buyers off that level. Of course, are going to start to see that as an opportunity, see that as a washout, buy it back up, and then they turn around and get squeezed back out with a move down. We'll just have to wait and see how that goes. Whoop, I don't want that, do I? Yeah, so we'll drop it down to just see what's happening on the 4-hourly. So again, this 4-hourly's had that one leg up, good correction, one leg up. You can see it's overextended here. So that's not looking positive either. That's looking a bit more bearish than anything else, which sort of that reversion to the long term. I think that was a 50 EMA up here. So we're sort of that reversion to the mean from a move down. We're just reverting back up. That's the pullback. Whether we start holding you don't really want to see a lower high on the 4-hourly chart. Whereas, as in something like this, we have a bit of a pullback. That's not going to work out, is it? I'll make that a bit thicker and I'll make it a different color. And I'll do that. There we go. So what you don't want to see is that pop up, have another go at it and build a lower high, and you get maybe this price action. That could lead us back down. And then you're probably looking for a short in that respect. Going to the 30 minutes to see what that's doing. Yes, the 30 minutes not showing anything for me just at this time. We could lift from here. I mean, that's not bad price action on the 30 minute, but it could just wash out this high, and then you start to get sellers coming. But either way, the 40 minute stretched. Sorry, the 4 hourly stretched. The daily's getting a bit stretched up here, looking like a prime rollover zone on the daily as well. It's just hasn't really played out for me at the moment, and it's not showing too much strength to be busting up through back to the daily, to busting up through this zone and heading up to 73, 72. You basically, if it's going to do it, you expect it to go straight up and have a couple of good sessions. But at the moment, um, with the currencies, I'm probably more biased biased up on the US dollar. It is choppy, and that's the problem at the moment. It's chopping around, up a couple of days, down a couple of days, up a couple of. So it's really just causing a few issues. The good thing for the Aussie is that it's a bit of a risk barometer uh, for the China-US relations. So if that's potentially looking like it's not going to be as bad, like we're not getting the 20, 25% tariffs, instead we're getting 10, they're going to come to some sort of agreement, then the negativity on the Aussies probably already been factored in, and any sellers that were looking for that to come down may be getting squeezed out of the market currently. We'll just have to see how that plays out. So either way, I wouldn't be jumping in either way, long or short at the moment, but I'll be biased short probably, potentially because of the US dollar that could kick up. Right, I skipped over Murray. Sorry, mate. Spot gold. Let's have a look at spot gold now. Where is my spot gold? XAU USD. When it wants to come up. All right, let's take a look at spot gold. And I think this is linked purely to the US dollar as well. So you're getting gold. I mean, we'll look at this in a second. But gold is getting chopped around a bit by a weaker US dollar, a stronger US dollar, a weaker US dollar, and it's not being used as a hedge at all. The US dollar's been used as a hedge. In times of crisis, they run into the US dollar and to bonds. They're not running into gold. So when the proverbial hit the fan, the markets come off. Through this emerging market crisis, they were jumping into the US dollar, and you can see gold getting sold off. So where does that leave us? If for gold to go up, you've got to expect, if that's the case, US dollar gets sold off. Every time it does pop up, you will read somewhere, oh, a safe haven buy, but it's not. I don't think it is. It's more just opportunistic buying, and it's moving around like a currency as the Aussie, the euro, the pound, not because it's gold and it's been bought up because of a hedge. It will be cheaper. I'm just going to remember. It might find some support if it does drop, and I think that's what's happened too. The last few days, you're finding a bit of support here as it comes off and the US dollar rallies. It should probably come off a bit stronger, maybe, but instead it's getting bought up because everyone loves a bit of gold, I guess, because it's cheaper in euro terms, it's cheaper in Aussie terms, it's cheaper just in other dollars terms, if that makes sense. Just to the charts, this is your daily. Look, the bad thing, what I don't like about this, if really, let's go out to a weekly first and just try to break it down. This doesn't look good. This move down, we broke out that move. We've been contracting. We've been well and truly contained it. Well, it's longer term, don't forget, 1365. But what we've done, this longer term rally up, we've touched, got ahead of ourselves, obviously, with this big push up to nearly $2,000 an ounce. This big pull, that corrected. We bounced, so that you pretty much got, that's your support zone. Bounced off here, popped up, bounced off again. And that was back up at 1120. Then popped up, but we found some selling pressure at 1360, say. But we've just broken down recently out of that, well, from that uptrend. So this is just the way I'm viewing it, that big sell-off. So whether we chop around here, we find some selling pressure and then roll over again, it's hard to say. The fact that, on the daily, we've had this bit of a blow off. It looks to me more like a blow off here. Once we cracked that zone around 1210 or 12,000, it was just heading south. We got sold pretty hard. and that was a bit of a bloss. Anytime you get that bit of a bloff, you might just consolidate a bit, and what it could do too is just drag in a few bulls. They start popping their head in. Um, we might find some buyers push it up through, was it 12.13, pop up, but just resumes this downtrend. You can see this. Let's just draw that in a different color. You can see that's sort of the key downtrend. This could be reversion to the mean, so we go up, pull back, consolidate through here. You can see there's some minor higher lows, inside higher lows. We start popping up again, only get so far as about 12.20 and then roll over. That could easily happen. I'm probably just looking at this daily time frame. Probably biased up slowly, but I mean I wouldn't trade this anyway. It's in a daily downtrend, probably just contracting. We don't know how far this could easily just pop up and then reverse straight on you. If you wanted to, you'd probably be looking more at the lower time frame charts. I mean, that doesn't look too bad. That's a 4-hourly chart. If you're buying it around here, you've got your risk under, say you bought it through here, you can have your risk quite tight, looking for that little contractive move up through 12.14. So you got 12.06. That's not too bad, but I'd be concerned if it gets up to sort of that 12.20 mark just to see what's happening. And don't forget, we've got a level. This is your anchor. No, I don't want that, do I? This is your anchor you're probably going to run headlong into. So the longer we spend chopping around, you can see the down move is sort of catching up with that anchor, and that anchor's around 12.17. So we might pop up, touch on 12.17. You're just taking out these highs. You dragged in some buyers, just enough to get the market to turn around. They've all got to exit and sell to exit and just squeeze them back out on the move down. So yeah, if you were going to go bullish on this, you probably want to have a relatively tight stop. I would anyway. 11.76. Oh mate, you nailed it. Oh, look, you hands down, you got a cracking trade there, Murray. Where'd you get in from? 11.76. Is this spot gold? So you took it somewhere, obviously way back here. That was way back in August. So look, that's not bad. I'd be tight. I like this sort of cup and handle. So the way I'm seeing this, if I can draw it, I'll draw it with my pen. How do I draw it with a pen? No, I can't. I'll take a snapshot because I think it's probably easier. What I'm seeing is since you're long, it's probably not too bad. And this is what I'd be, for me, you've had this move up here, then we've had this pullback, and then you're starting to get this type of cup and handle type of move. It's taken out some levels. This could be a washout, you don't know. So I probably would tighten up, and that's just me. I don't like whacking too much risk on these sorts of things, especially when the overall, longer term trend is down. You're going to get to a certain point where there's going to be pressure applied again. You might be getting a bit extended. What are we on the 30-minute chart? 4-hourly chart. We're looking to get a bit extended up here. So you've got to ask yourself how many more bulls are out there going to give this a bit of a reaming up. Who knows? I mean, it's up to you. I just sort of think this could easily pop up, pull back. You might wash out that level and then find some selling. That's what I think. It's more that zone up around that 12.17, 12.18 that you're going to be concerned with at the moment. All right, let's get into it. So that was that. What else we got? Spot gold, SLR. Back over to the stocks now. All right. I hope that makes sense anyway. I hope it's going to help. Where am I? Let's get over here. John, SLR. Yeah, I don't mind this, and it's more for the weekly. Now the weekly for me, and you could probably, if you've been following for a while, you can see what I'm looking at here. Let's just take a step back. Let's just take nothing significantly changed. So now that was a while ago, that big banging down there. Spent a lot of time basing, about a year. Started to lift in 2016, towards the end of 2016. Had a pullback in 2017, and we're starting to lift again. So that's your monthly chart. So we're going to focus in on pretty much the weekly, and then we'll drop it down to daily just for a sec. So that's your major support zone for me through what was about 13, 14 cents. You've had this market lift, had a decent pullback here, built a higher low, tried to lift again, couldn't get through those highs really significantly, and we probably run into that zone there, if you can see. So let's just draw that slightly differently. Just sort of a sell zone up here. So we had a bit of a go. We couldn't get through there, and that's led to this, just sell off what we saw. But you can see again the angle of descent. The initial selling pressure is quite heavy again. Buying come in slightly here, and then this selling pressure that took us down to about 30 cents has that there. You can see the selling pressure is running out of steam. The buyers are starting to step in as we come down to a zone. Who knows? There's no real support level which they were trying to buy it off. It was just averaging down potentially. And then you've got this couple of good days here. Their pullback built a high low, and then we lift. So a good strong move up. So for me, this is very healthy. We've had a good move up here. So it's taken about 65. A touch below that resistance zone at 75. We're off a key longer term higher low at around 30. And you can see last time oversold here, oversold here. That corresponds to here. Well, this sort of zone, oversold in here, oversold with this high low on a chart. Come down oversold, but that was more divergence there. Got to overbought. Sellers started jumping back in. Sellers put the pressure on, pushed it back down. Then we got oversold. You can see well and truly oversold, but we're holding up a higher level. So for me, you can start looking at something like that. We're potentially putting a bit of a squeeze on the sellers, starting to hold higher lows. Buyers were potentially edging in here, got some more here, probably had to be patient, starting to get some more here as we get that reversion to the mean. So it's looking pretty good. It's just the daily dropping it down in the weekly. I think that's a prime zone on SLR. Going down to the daily, look, I don't think we built it just yet. Again, dropping it to the daily, you know that this weekly, that's going to be a prime zone for buying. So we're just trying to analyze it from the weekly. So that's a good zone somewhere in there, but we really want to see, you can see it's getting a bit overextended up here. The MAs are down at the moment, so we need to just drag in some more buying. So this, as off a daily chart, I don't think there's any reason to buy just through that push there, because this could easily be a pop-up like we got here. Got a leg down, pop-up, leg down. This could be a pop-up and we head down south again, all the way back down to 36. Could be completely wrong. So what you'd ideally want to see off this little contractive price action, there's another move down, but hold up above 46 in this zone and build that higher low. So at the moment we've got this sort of, oh, how did that happen? Bit of a wonky move. So that's, I'll just make that the move there. That's our move up to, well, 53. I want to see this price action and start to hold up. I want to see it come from overbought up here, come back down sort of oversold, or at least through 50%, head down, look to buy, and then if you can get a setup from there off a higher low, that's awesome, because then you know that you're on the rise in the daily and you're on the rise in the weekly. And from there, if you can get that type of setup where it's squeezed in and you're getting buyers starting to win out, showing their hand a bit, and sellers getting squeezed out of the market, then you'd be looking up towards 64 and so on. And even past that, because don't forget it, we're looking at that weekly. So if we can break up through, what did we say on the weekly that zone was? 75 actually. This is going to be your first port of call. I would expect that these will probably be about equal from low to high. If this is going to be a low to high, takes you somewhere up that resistance zone around 75. So what's that, 20 cents off 55? You're looking somewhere around 40% gain on that. If that's the case, if we can get up there. So that's what I've got my eye on. It's more the daily. It's just looking for that, this type of price action. If we can get that, great. If not, we'll just have to wait and see. So that's SLR. What was the other one? SLR VRL. I spelled that right. Village. So yeah, we've got a little high low here, but in context that obviously let's just look at that weekly. The weekly's still in a downtrend, getting overextended up at 225 on that weekly. So you might find a bit of pressure up here, and it's probably coinciding with this zone through. Let's just have a crack at that. So for me, when I'm buying something and I want to be convinced that there's a good run up in it, I'm ideally looking for I mean, this is in a downtrend. You can see down, up, lower high, down here, up, lower high. We popped up. It's probably the first sign that maybe some strength's coming into it, because if this was weak, you'd expect it to turn. You wouldn't expect it to retrace nearly 100% of this move down. So that's the move down from around 245 down to around 180 that we're looking at. This, I'll just change colors. This essentially retracement is still going on at the moment. Is nearly 100% of that move. So that's your sort of first heads up that potentially, okay, buyers are starting to come in. If it was weak and you don't know what's going to happen, it could be completely going to capitulate. It's selling pressure should have come in a bit early and start to really struggle selling coming in here and then roll over, take out these lows and so on. So that's your first sign for me that potentially buyers are starting to step in. But I wouldn't buy it off that daily chart, because it's the weekly chart that's still well and truly in a downtrend, and we're extended on the weekly. So from the weekly, I'd want to see it chop around here. So I just want to see potentially test $2 again, and that's that previous low from here. Well, actually, we can see that on the daily, can't we? That low there, potentially come back down, test, and then start to, hold. And if we can hold some higher lows off that, then great. I think that's going to be a much stronger trade from a daily chart, getting your higher lows. Say that's your $2 zone. If we can come back down, test $2, build an inside higher level, then I'd probably be happy to buy that, because essentially you've got a double bottom or a triple bottom, and that there you can see that gap down. That was pretty much a washout, and since then we've gapped through that $2 zone. It's lifted, and it's lifted quite well up to 240. So especially if we test 240, we push through 240, or touch on 250, 55, and then we come back down to build the high low. Great. Then I think that could be a well and truly worthwhile trade. All right. I hope that makes a bit of sense there. So yeah, VRL, I think the daily's just crossed up, but it's still in context of what's happened on the weekly. I think there's still a bit of weekly pressure. We're looking at the daily too is extended up here. So I wouldn't be going for long up there, but if you got potentially you might have a long there, Paul. I'm not sure. Um, I would. I mean, it's just me tightening my risk a bit. Again, I don't know anything about the fundamentals of it. All right, let's get on. So we got last one, TLS, everyone's favorite. Yeah, I just don't like Telstra. Excuse me. And even, the bulls have come out because it's pushed down to 250. We got that bit of a rally. If you go down to your daily chart, this bit of a rally here. Great. Look what's happening here. We got the fact that it's big spike up to 340, come down, and that. This is not controlled price action at all. This is a bit of FOMO, fear of missing out. No worries, Preet. Don't know, from one a-hole to another. Doesn't bother me. So what do we got here? So this is probably, I just want to go back. Yeah, it's not really saying anything. So on this daily, I always do that, don't I? All right, screen snapshot, discard. Let's go like that. All right. So this was pretty much your anchor. You can see this moved down. I don't know if it started there. That was probably a bit of contraction back up. Touched on 375, weakness coming again. Boom, you can just see one after another. Fell over there, back up, falling over here. But what we've got here is it's starting to lift, and that dragged in some buyers. You probably expect that's more of a div trade. People buying it around 290 for the dividends potentially. And it's quite cheap in a lot of people's mind, undervalued. As a trader, I probably wouldn't have gone through that, because it really hadn't have broken that anchor through $3 for me, and it's just off some high lows. I mean, as it worked out, it was nice. If you bought it through 290, you got this run up to 330. Great. With your divs, you risk under that level, under 280 level or thereabouts. I think that was a good trade. Then it's come off pretty hard, and you can see the difference. This has been a bit of a grind back up again to get as far as 330, and we've got a couple of red candles. That's not a positive move. this could potentially be a serious another leg down. And then I'd probably want to be analyzing it to see what happens after that. And if you do get that leg down, to see what happens around potentially 270 again. That's what I'd have on the radar, because that weekly chart, I mean, we're just coming off over extended level up here. And if this was a strong market, it is really bullish, it should have taken out 340. So from there, you've got to analyze it. What are we going to get? Are we going to get some further sell off, another lower high, take out 260 lows, and continue our way down? Because this weekly trend potentially is nowhere near finished. It's a reversion to the mean on the weekly at 325, 330. So if that's the case, if it's just reversion to the mean, this is a continuation trade from the weekly, and we're going to head south, take out what's the low there, 260, and keep heading down until that rot is stopped. So that's because, so you can see what I'm saying. So the weekly and the daily are pretty much conflicting each other. What do we got? South is reckoned by two traders using stock exchange. Another chartist works with. I just realised STO is also listed on the ASX. Yep. Yep. Weekly also a cup and handle forming on TLS. Okay. The weekly, look, this is, you don't really get a cup and hand. For me, this is just a downtrend. This is just potentially that candle there on the weekly is a lower high. This was just a bit of correction, because on the weekly, there's no real, for me anyway, that it's probably on the daily. You've got this pop up here. That's your, your handle, your cup started accelerating. That's where you would want to got in long, and just realizing that you're going against the flow for the weekly. So now we might be at this zone here where weekly sellers, okay, it's popped up. It's probably got still some weakness to come. Let's get out. If you were holding it up here, if you bought it on this little pop down, this retest it, so was it 340, just in here, you probably want to get out now. Obviously I don't know what's going to happen, and this has been a well and truly downtrend. It's been thumped. So sooner or later it's going to find some serious buying. It's just whether it's going to be here, whether we're going to pop down, like I said, that retest somewhere down at these lows and start to build again and start to base out down here, or whether they're going to go straight down to through 270 or through 260 and just continue that weekly trend down. But either way, that move up's taken a bit of energy. The weekly anchor to the downtrend is up at the highs around 378, so, or 375. So you can see, well, I'm pointing to it with my finger. No, you can't see that. Around that 375 zone, this recent level. Okay, that was your minor bit of contraction back up, fell over, contraction back up. Potentially we're getting another lower high. So really, you're going to have, if you're looking to buy it, I'd give it a bit of time. That's just me personally. I wouldn't go near it, because I think you're up against the weekly traders, longer term traders who could just be had enough and getting out. If not, I'd rather see other price action. Potentially take out $3, your secondary leg down, and don't forget it can be that. Where am I going? It can be this. So that's your leg up here. One move down, quite a deep correction to that. That's your deep correction here. Pop up. I want to see secondary move down, but in a zone where it could build a higher low. Get stretched to the downside, oversold territory, but potentially holding a higher low. And this is the higher low that I'll be looking for to trade from. And if that's the case, and we can get a bit of contraction in there, something like that, then bang, where you're going to minimize your risk and then have a go at the longs. All right. Anyway, probably call it a day there, guys. So we've got through everything. Any questions on anything? If I haven't answered anything, just send through an email to support@tradesetup.com.au. If I have, that's great. All right, guys, we'll call it a day there. Thanks for joining me, and we look forward to seeing you again on Monday at 12:30 again. All right, enjoy your weekend. Hope you all had some time to relax. I'm probably gonna have more kids around next week. We've got them on holidays, so last day school holiday starts on tomorrow afternoon at 2:30. So I'll have the kids on for the next couple of weeks, which will be a bit of fun. So they'll be coming in and out of the room. Might get them in just to do a bit of analysis for you on Monday. All right, guys. Thanks very much. See you later, Paul. See you, Preet. See you guys. We'll speak to you on Monday. Have a great weekend. Bye.